Well, I just saw something pretty cool. The S&P just gapped down this morning. It's 9:43. We're heading back to the office, and we're gonna get ready for maybe a trade this morning. The HVAs were drawn this last night, like we always do, and so I might take a long this morning because price seemed to have touched the bottom of the HVA, one of the HVA, lower HVA. So this is pretty much what I'm looking to do this morning. I don't know if I'm going to do it or not. We're going to give the market to settle down a little bit. We had news this morning, 8:30 a.m., and it seems like the market didn't like it. 10:30, I think we have another news, but it concerns I don't know, the petroleum stuff. That's nothing really. I don't think anything that will cause problem for us. So this is what I'm doing. I'm heading home, heading to the office, and I'll follow this on Twitch. All right, so to put things in perspective, this morning I had a few decisions that I had to take that were pretty tough. I followed my plan. I waited. I think I was pretty patient, and I waited until the price hit the bottom of the HVA, like I told you yesterday. It was a pretty tough. This morning, the market opened with a gap down, and it kept selling all morning long. And I was looking for a correction and going long when I get to the bottom of the HVA to go back in. But I felt like it was moving down really rapidly. So I waited, and I saw that the price was keeping knocking on the support, and the price kept knocking on the support. I was like, oh my God, I'm not sure. And it broke the bottom of the HVA and went all the way down. And the next stopping point was the 20 SMA, and I decided that I was going to go long at the 20 SMA, and I would put my stop loss right under it. Now I'm talking about the SPY. The QQQ is a little bit different. It had already broken the 20 SMA, but I went long right at the bottom of the HVA. So I followed my plan. Quite frankly, it's nerve-wracking. I feel like this morning I had a pocket ace, poker analogy, but even with pocket aces, you could get beat. I just reduced the size of my just a tiny bit. I just reduced a tiny bit the size of my risk. Okay, so let's do it again. This is unbelievable. So I told you that we've been having these divergence for a while. Price versus indicators, RSI, or I use the awesome oscillators. It doesn't really matter. I've observed this many times over. When we have a divergence for a while, it's probably the end of a trend, or at least a correction. And we've been having these divergence for maybe, I don't know, a couple of weeks, maybe a month, and it kept moving higher and higher and higher, and I was like, God. And the higher it went, the lower the peaks on the awesome oscillator was doing. So I was like, wow, that's a real divergence. There's something going on here. So we had to expect this move. And yesterday I expected that it was starting. I expected that we would have a drastic down move yesterday, but actually we had it today. So so I just wanted to touch base on that. I don't have anything to tell you about anymore. What else should I tell you? We are in a long-term uptrend, and so in my opinion the best trades are to go long when you have a pullback, and the best pullback areas are usually the 10 EMA, the 20 SMA, or the 50 SMA, or the bottom of my HVAs, which I draw every day from the volume profile on Thinkorswim. This morning we hit at the bottom of this HVA that I'm talking to you about. We got in yesterday. We took a short because I thought that we were going from the top to the bottom, and sure we did. But we did this morning. It was a winner day. It was still a winner because it's a credit spread. So a credit spread gives me a little bit of room. If the market does not move very much, I still have full profit. But this morning, the market, like I said, the market gapped down, and it kept selling all morning long, and it hit the bottom of the HVA. I had a decision to make. It was an aggressive move this morning, so I decided to wait a little bit, and it's a good thing that I waited because it broke the bottom of the HVA. And like I said in the room this morning on the stream, if you knock long enough on somebody's door, something's going to happen. It's either he's going to answer. If he's not there, his neighbor's going to call the police, but something's going to happen. That's what happened this morning. The 3 or 4 previous down move, retracement, pullback, call it whatever you will, the 20 SMA was respected. So I expect that it might be respected today as well. Maybe not. We'll see what happens. But this is the decision that I took this morning. I had to grab my balls and do it. I followed my plan, but sometimes following your plan is nerve-wracking because you doubt it. And it's okay to doubt it because a plan only takes into account probabilities. Probabilities mean that more times than not, what you expect the things to happen will happen. But you still have variance. Probabilities are saying 60% of the time it will go back up, 40% of the time it will go down. Well, you have to deal with those. And unfortunately, this is something that I personally have to battle each and every time. I do have to battle each and every time because I would like to be right. I would like all my trades to be winners. And the best years I've had is when I blanked. I completely, for some reason, I got rid of my expectations. You have to grab your balls and go in, and that's it. And you have to accept the consequences. This is pretty much what I had to say for today. Stay safe, stay happy, have fun, and keep trading, keep fighting. All right, see you later, guys.